foreclosure cases. This is not census data, but I thought it was important because it kind of ties in what's been going on in housing in the region. These are foreclosure cases. Now, it doesn't mean that it went to the final foreclosure, but it means that they're at least at the stage where there has been a case that's on the books that it's about to be foreclosed. And it's kept up by the Administrative Office of the Courts for North Carolina. I combine them for the 4 counties. You see an increase from 636 to 2206. So it's more than tripled since 2000. It's almost quadrupled. And 2010, that was the most ever, 2206. This is going to fluctuate a little bit. Part of it depends on how quickly the banks process the foreclosed case. How quickly does the case go? Is the house just sitting there? But I suspect for the next several years, and kind of looking at the information through June 30th, we're going to be close to this 1750 to 2000 level for a while. And again, this is a couple factors. One had to do with, of course, the housing practices, mortgage practices that went on. I think a lot of this has to do with job losses as well. They lost their job, that 47,000 job loss. Suddenly they can't make their mortgage payments, foreclosure process starts. And talking with the foreclosure counselors at the COG, that's what they're telling us is we had a lot of kind of risky mortgage practices when they started, but they're seeing more and more of, I've lost my job, I suddenly can't make my mortgage payment, what am I going to do? Let's look at Catawba counties here. And you'll see it's very similar. 284 in 2000, 975 in 2010. So again, it's more than a 300% increase. That's a lot, and that's definitely a burden on the county that the county and the region is going to have to deal with for years to come. Okay?
Do you have a comparison MSA similar size around the country?
We've looked at it for our area versus others in the state. We have a lot. As bad as those numbers were, there's actually other metro areas that are in worse shape, a lot worse shape. One thing that helped us a little bit, we didn't have as much new construction going on in the last 10 years as other metro areas in, let's say, a Florida or Nevada or California, for instance. So that helped us a little bit in compared to others. The other factor that helped us is we have a lot of homes that the homeowner doesn't pay mortgage because they've been in their homes 30 plus years, so they don't have a mortgage payment. So if we didn't have those two factors, it would be worse than other areas, but it's still not good.
Well, let me ask you this. It showed in the previous 3 years, it had sort of plateaued, and you see a bump up for this previous year. Does it look like it's going to continue to trend up?
Let's see. Can you maybe go back one? Yeah. Okay. So the question is it gonna? Are we gonna top 1,000 and go up, or is it?
Yeah.
My guess is it's gonna stay for the next few years in this range, probably between 750 and over 1,000, a little bit. Part of it depends on how quickly banks process mortgages and whether there's a moratorium. We've had a couple of those that slowed it down. If they do a moratorium, you don't get as many cases. Moratorium's up, then you see an increase in cases. That's part of the fluctuation.
Is any of this a carryover of cases from year to year where they may have been in the foreclosure process in 2009 and it carried over to 2010?
Okay. If the case occurred in 2009, that's the year it gets counted, even if the litigation goes on for a year or 2 years or longer. I mean, some cases have gone on multiple years.
But it's not double counted.
When the case was filed with the Register of Deeds and the Administration of Courts.
Okay.
Yes.
Again, this might be a difficult question to answer. At what point, or let me rephrase it, how much reserving, if you will, do the localities and the counties do for lack of tax revenue from foreclosures?
Lack of tax revenue from foreclosures. Okay. I'm not sure I can answer that really well. The tax bill is due, and of course it's based on the value of the house. So the question is, I guess the question you're asking is, does it get paid or does it not get paid?
While the homeowner is not paying the mortgage, taxes aren't being paid either. So we have anywhere from, let's call it, roughly 800 a year houses going to foreclosure in the county. At what point does that have how many would be necessary to go into foreclosure before there's a tremendous impact on county tax collection?
I think you have to look at that case by case basis. In foreclosure, then the taxes are not paid. Once foreclosure is happened, it goes to a trustee and the bank pays those taxes.
And if I recall correctly from the city history figures, the tax collection rate is just very high, it's not overwhelmingly, I'm thinking less than 1% of tax collection, so it's somewhat but not huge.
Okay,
Yeah.
that answers my question.
Yeah, the bigger issue going forward is if you have more and more foreclosures, would that affect evaluation? That's the part where your tax base could be impacted, because if your home values are less, when they do evaluation the next time, they're going to collect fewer on that house. But you have to look at it in totality with everybody else.
Yeah, foreclosures do not impact the revaluation process, because it's not calculated revaluation process.
Right.
Unless that neighborhood is over 50+% of foreclosure. What happens is that the home price market of the house that's not foreclosed is in competition with foreclosed upon properties. So the market value that you actually sell your home for is in competition with this increased flood of foreclosed on property, so it brings the net down. And we have seen some of that, and we'll probably see it
Yeah, I would agree with that.
Well, we're hearing in some neighborhoods, nothing sells for foreclosure.
But foreclosed sales are not calculated in your.
That's right, so even though half a house in the neighborhood is sold in foreclosure, there's no basis for changing the valuation, because no house is sold by that record.
Correct. But that's part of the way it
All right.
is. It's based on fair market value. Foreclosure is not considered fair market unless you're over 50%.
All right. You go to the next one. Okay, Catawba County owner versus renter. I didn't want to mention this real briefly. This is owner occupied versus renter occupied. If you look at the 90s, the biggest increase was owner occupied. It's almost a little more than 2 to 1. If you look at the 2000s, we actually had a bigger increase in renter occupied units than owner occupied units. And that's following a national trend that you see. The percent of population with home ownership right now is as low as it's been in decades. We're a lot higher than the national average because we have a lot more owner occupied. But even if you look at new owner renter occupied, you're actually seeing more renter occupied. And again, I think that's related to the economy. And going forward, probably being able to apply to get a mortgage is going to be harder than it was in the previous decade. You're going to see more rentals for sure. Okay. Homeowner vacancy rates, 2.3%. They take out a lot of those other rentals. That's how they calculate it. So even though we had this increase in homeowner vacancies, we're actually in line or a little bit lower than other areas. So I think that's a positive. Renter occupied. Go ahead. Renter occupied vacancy rate, we're fairly high, 11.5%. But that's in line with a lot of other metro areas. So we seem to be following actually a little better on the homeowner side and fairly similar to other areas in the state in terms of rental vacancies. But it's still a lot. Okay? And then this is kind of that other category. 34%, it's a little bit higher than some of the metro areas, but not as high as some of the others. So we're kind of middle of the road in that too. Okay? I want to talk a little bit, I think I've got about 7 or 8 minutes left. Talk about some of the results of the American Community Survey. This is not from the 2010 census, but we get the information every year. It goes to about 250,000 households nationwide. It's meant to replace the census long form that some of you might have filled out in 2000. So we're getting census data every year, but the sample size isn't as large as it used to be. It comes out probably around September 30th for areas above 65,000. So we get new data every year. And that's going to help us to tell how the economy is impacting these numbers. And then for small areas, we get them in December, and they use a 5-year sampling. So we can actually look at areas within counties or smaller counties and municipalities. So we're going to touch on just a couple of those topics. Okay? Poverty. I'm going to talk about poverty and educational attainment. That's the two we're going to talk about today. There's actually a lot of other information. You can go to the Census Bureau website, but I wanted to mention these because I think they're important. One is the increase in poverty in the region. And I know several of you have heard me talk about this before, but I think it's really important to mention. 32,000 in poverty in 2000. 2009, 57,208. That's a 78% increase in the number of individuals living in poverty in our region. What is poverty? For a family of 4, it's about 22,500. Not very much. I think this is one issue that the region is going to have to deal with, because it's going to impact the business community, and it impacts counties and the services that they deliver, as well as the state government and federal government too.
Has the poverty level been adjusted since 2000?
Yes, it's adjusted every year. They base it on the CPI,